we were still in very early days. I mean, one thing I'd like to point out, David, I think your listeners might enjoy it, is just the notion that this is, I mean, a lot of people I know think they're too late. They look at Bitcoin at 100,000, they know people who bought it cheaper. They think, how can I pay that? It's way too much. It's too high.
Hmm.
And what they don't really understand is that it's going to continue going up for a very long time as it kind of slowly but surely replaces the dollar standard. And, there are $900 trillion of global financial assets out there. If you look at everything, if you include real estate, stocks, bonds, cash, etc. The Bitcoin market cap today is 2 trillion. So it's 0.2% of all of the assets out there. So, that's a very small percentage, a very small weighting. I mean, we're still very early days. And I mean, Bitcoin could go up in value 10x, which would take it from today's value of 100,000 up to $1 million a coin. And if it were to do so, it'd still only be 2% of total assets out there. It's got quite some way to run. And I think that's one of the things a lot of people have a hard time getting their head around. I mean, I know when I was buying it, I mean, Max Kaiser bought it at $2 and I was buying it at 400. So, everybody feels like they're too late. But if we're correct that, the fiat is slowly but surely getting debased and that this is a potential new monetary system, which I think it is, and my book talks about that, then you're really not too late. You just buy it and forget about it, hold on to it, and I think you wake up in 3 to 5 years. I mean, in let's say in 5 years it's $1 million a coin, which is kind of what I expect. 5 years.
Sure.
Well, anybody coming along looking at it then is going to say, "Oh my God, you bought it at 100,000? Gee whiz! I wish I'd done that." Right? And so, and then of course the person who buys it at $1 million, that 10 years later it'll be at 10 million a coin, and somebody will have the same conversation. So, it's the thing, and the reason I say all this, and the thing that I also think is important to point out with respect to it is, we've never seen anything like this, David. This is a commodity that has an inelastic supply we can't make any more of it. So the 21 million, we're growing towards that. We're at 19 and change. So there's a little bit more being made, but I mean, basically, we're very close to the supply limit, and as a result of that, it doesn't matter what the price is. The schedule of supply isn't going to change. The price of gold goes to 10,000, which I fully expect in this cycle, by the way. We're going to mine more gold. I mean, they're going to dig more holes and produce more gold because it'll be profitable to do so. The issuance schedule of Bitcoin doesn't change. And that's why it's very hard for traditional financial people to get their head around the fact that this thing's going to go up a whole lot. It's a very asymmetric bet. And I've been saying that. The book says it. This is the most asymmetric thing I've seen in my 40 some odd years of making investments. And so,
Mark Cuban, I'd rather own Bitcoin than gold. If something bad happens to the economy, I think it has more value. People see it as an option in the event of the economy going down or something bad happening. Gold isn't based off the supply and demand of jewelry. And then he said, people who hold Bitcoin see it as great store of value. Do you agree?
And Bitcoin came around and, very volatile, but in my opinion now it's as good or better than gold. And certainly in terms of upside appreciation potential, it's more volatile still, but that's just because it's being adopted. And, I really kind of view it as digital gold. And the macro point that I would make that, I think most people who listen to me know, and is that, the government is in a position, as we discussed, where they just have to keep printing money and diluting the value of the currencies compared to things, goods and services and assets. And, the beautiful thing about gold, the beautiful thing about silver, the beautiful thing about Bitcoin is the government can't print them. They're outside of government control. And I think that's, it's important. I think it's going to become more important, as in this next 5 or 10 year time frame.
Yeah, I don't think Cuban has ever liked gold. He called it a pet rock at one point. I don't know if Joe has that point of view. But yeah, why invest in a rock? I mean, what's the upside here? I mean, yeah.
Well, I mean, look, before Bitcoin came along, it was the soundest form of money around, and it's got 5,000 years of Lindy effect, and 8 billion people know that gold is money, and so it's not going to just disappear. People say, well, Bitcoin's going to replace gold, and to some extent that's true, and Bitcoin's price performance will outperform gold, and that's because it's they both will go up as the money is diluted. I mean, that's a fact. But Bitcoin will, in my opinion, go much, much faster because it's also enjoying an adoption curve. I mean, gold is not some new thing. I mean, it's been around for millennia. And so anyone who wants to own gold knows what it is and they've already bought it. And whereas Bitcoin, 15 years ago it didn't exist, and 10 years ago almost nobody knew about it, and now more people know about it. And so that adoption curve is what's making Bitcoin outperform gold. But they both will go up if fiat currencies fail, and I think there's some chance of that. They will both go up in fiat terms. Now, the problem there is, we could have $10,000 gold, and we could have $1 million Bitcoin. We could also have, $30 gasoline. So, because fiat, is just programmed to debase.
So the when you say fail, it just means purchasing power of fiat is going down. That's what you mean?
It's just going down, and at varying rates, though, as you and I discussed earlier in this call, or in this conversation. Some years it goes down 9%, some years it goes down less, but there aren't many. There aren't years when fiat goes up very often in terms of assets, gold and silver and Bitcoin and real estate and so forth. So, and that's just the way the system's constructed. By the end of 2025, I also made calls that Bitcoin would hit 100 by the end of 2024. Unfortunately, I was right about that, although it's bounced around that level. But yeah, I do kind of think we'll see 200 on this particular cycle. And by the way, once we get there, we might correct back down to 130 or something. But, we are in a bull market cycle for Bitcoin based on, the past cycles. They tend to go 5x off the base, and the base was called the base. Depends on what you want to look at, but say it's 40,000. 5x is 200. So yes, I think this cycle will take us to 200.
The major impetus or catalyst for a higher Bitcoin price, one could argue, already happened. We had the Bitcoin ETF, the most successful ETF launch of all time. Trump has been supportive of Bitcoin, pro-Bitcoin people in government. All happened already. What's the next catalyst then? Yeah,
it could all be in the price. Well, certainly one that we're all watching, and we think that it's going to happen, is if the United States decides to unilaterally, create a strategic Bitcoin reserve, that could have an impact on the price. I think that, there's evidence that other countries are accumulating Bitcoin. And so there's further evidence that, in my mind, that this is starting, so this used to be a very individualized investment, just crazy Bitcoiners were buying it. Then it became a broader investment when the ETFs got approved, and people like BlackRock, the largest fund manager in the United States, started buying it and approving of it.
Yes.
And now we're kind of moving into a situation where countries are buying it. El Salvador has been buying it, but they're kind of small, and they were the first mover. I was at this Bitcoin conference in the Middle East at Abu Dhabi in December, early December, and Trump's son was there, and so was Paul Manafort, who's a Trump guy, who did part of the transition team. And it's pretty clear to me that they think that they're going to do a strategic reserve. And the other rumblings behind the scenes were that Abu Dhabi, Oman, or Abu Dhabi being UAE, Oman, and the Saudis are all accumulating Bitcoin. And in fact, I was told that they want to announce it, but the Trump administration said, can you wait until after we've announced ours? So, if you get to the point where nation states start to realize that this is important, look, nation states realize gold is important. That's why they hold gold on their balance sheet. That's why central banks have been net buyers of gold for the last 5 years.
But do you agree with Cuban with the notion that Bitcoin is a better safe haven asset in hard times?
Well, yes. So let's get our terms right. Let's define safe haven. There is no doubt that Bitcoin is more volatile than gold. That's just a statistical fact.
Yeah.
So, if you want to define safe haven as low volatility, then no, gold is a better asset than Bitcoin. If your only measure is volatility, if your measure is alpha and potential upside, Bitcoin crushes gold. So, it kind of depends on what you're looking at it for. One criticism a lot of people have leveled at Bitcoin is they've said, well, it's really just a liquidity widget and it trades like the NASDAQ. When the NASDAQ goes down, Bitcoin goes down. And there isn't a safe haven bid for Bitcoin. And that's a fair criticism because there has been a pretty tight correlation. But I think that will change over time. I think that we're heading into a period where it's going to be seen as a safer haven. And I'll tell you why I say that, David. There's a really interesting chart. I don't have it in front of me right now, but if you run a chart of Bitcoin compared to the long bond, what used to be the safest haven financial asset, the long bond, the 10-year bond, the 30-year bond, right? It's a U.S. Treasury, couldn't default, it was good as gold, so to speak. Well, if you look at Bitcoin and gold and compare to that, they are just absolutely crushing it in the last 3-4 years. And so the bonds are disappearing as a safe haven asset, in my opinion. And Bitcoin, gold has always been a safe haven asset. I think will continue to be one, but Bitcoin, I think it's going in that direction. But just as with anything else, when you're in the early adoption stage of something, it's going to have a lot of volatility. A perfect example is Amazon. I mean, Bill Miller made a fortune by believing in Amazon early, betting big on it. Amazon had, and this is actually in the book I wrote, Amazon had multiple huge drawdowns, in the early years before it really got fully established. And that's very comparable to what Bitcoin is seeing. I mean, let's not forget that Bitcoin has had corrections of 70 or 80%. And I don't think the next correction will be that large because I think there's more universal demand. But I don't think we're suddenly in a world where there won't be corrections in Bitcoin. I mean, I fully expect that we'll get a real big ramp on this cycle because that's how it tends to happen. And that at that point in time, everyone will be a little too ahead of themselves and we'll get a correction. And, so we go to 200, we come back to 120, something like that. I'm just making those numbers up, but it's kind of my guess. The layer two, so we've established, in my opinion, we've clearly established that Bitcoin is the superior store of value digital currency. It's digital gold. The medium of exchange currency for online is still, I think, a little bit of a jump ball. I mean, hardcore Bitcoiners think that the Lightning Network will provide that. But there are people and intelligent people who have alternative views that another currency will emerge that will be a much better and more efficient and, widely used way to exchange money in cryptocurrencies, whether it be a stable coin or a Solana or, XRP. I mean, there are a lot of different things competing for that, but there's no guarantee that Lightning is going to be the solution. So I think we just have to wait and see. But the thing about this medium of exchange coin is by definition, it's not going to be a sound of money. They're built on Ethereum, and Ethereum's had 7 monetary policies, right?
And that's that's a good point, because here's my issue with Bitcoiners and crypto enthusiasts talking about an alternative currency for a medium of exchange. If you actually look at B2B transactions on platforms like Coin Payments, for example, they used to transact primarily in Bitcoin many years ago. Now it's primarily stablecoins. Stablecoin is just a digital fiat. People are still using fiat in blockchain form. That's right. That's exactly right. And the other thing that's really true is that we've got pretty good payment mechanisms. I mean, you got PayPal, you got Venmo, you got credit cards, you got. I mean, it's not like medium of exchange and the dollar works. So a medium of exchange is pretty well covered. Now, if you're in the third world, maybe it's not. If you live in, there's actually have a good example in my book about how Nairobi has become a very heavy user of Bitcoin because they got a shitty currency that depreciates constantly. And so there are a lot of people there who use Bitcoin and Lightning to transact. But yes, the medium of exchange question is still a very undetermined and unanswered question in my mind. But that's a different issue than the issue of investing in a currency or an asset that will protect you from inflation, which in my opinion, there's just nothing that even compares to Bitcoin.